Let me show you the easiest possible way to know if you should be investing into a company or not. Now, when I say investing into, specifically what I'm talking about is investing in the stock market. I'm going to give you a high-level overview to know if you should be investing into a company or not. But before we do, my name is Rick. I hope you turn daily news into daily profits. If that's something you're into, make sure you follow this page. So for this example, I chose NVIDIA. Now, the very first thing you should know about a company before you invest into them is, can you explain exactly what they do in 1 to 2 sentences? So for NVIDIA, they're a hardware computer chip company. They sell computer chips. If you don't know exactly what they do and you can't describe it in 1 to 2 sentences, you shouldn't buy it. Okay, good. So you can explain what they do. So what's the next step? The next step is going to be this guy. This is an earnings report. Now, earnings reports come out for publicly traded companies, so companies you can buy on the stock market every 3 months. And what they tell you is, how is the company doing sales-wise? What are our expectations of sales, and did we beat those expectations or not? So you'll see these dark green circles. These dark green circles are expectations of sales. This is what we expect the company is going to be able to sell for this quarter. If it's this dot right here, which is a highlight green color, this is what they actually did. So this is the expectation, and this is what they actually did. This is really good. That means they blew sales expectations out of the water. Very good sign for the company. And we see that they've been consistently doing this for at least a year. So it's probably pretty likely that if over the past year they've been consistently beating expectations for their sales goals, that'll probably continue in the short term. Now you've looked at earnings reports, so what's after that? Next thing is going to be the analyst ratings. This will tell you what most people are doing with the stocks based on what analysts notice. So at this specific company, most people are buying this stock or they're holding it. They're not really selling it. So this gives you a market indication of if people are excited about the stock and if they're wanting more of it, or if they're leaning more toward a sell and excitement's dying down behind it. So for NVIDIA, you could see people are really excited about this stock. And then the last and probably most important is going to be the balance sheet. So I'll break this down super simple. MRQ stands for most recent quarter. So in their most recent quarter, they had total cash on hand of $56.79 billion, and their total debt is $10.6 billion, meaning if they wanted to, they could pay off their debt completely and be a debt-free company. They are still holding debt of 10% though. That's extremely low for a company. So basically what that balance sheet tells you is, even though they have debt, if they needed to in a pinch, they could pay that debt off. That's a really good thing because most companies can't do that. So if you were wondering, should I buy a company in the stock market or not? Well, now you have a resource to go to anytime you question it. And make sure you save this video and come back to it because you'll probably need it in the future.